You're taught to fear taxes. You're told they fund roads, schools, and defense. You're told everyone must pay their fair share. This is the public lie. The private truth is that for the world's wealthiest families, the Rockefellers, the Waltons, the Murdochs, the fundamental laws of taxation simply do not apply. What if the secret to their eternal wealth isn't some modern loophole or an offshore bank? What if it's an ancient medieval legal construct, a forgotten code invented by feudal lords and cunning priests almost 900 years ago? This is the story of the trust, the single most powerful wealth shield ever created, a system that legally separates ownership from control, ensuring that the 1% can wield the economic power of nations while remaining, officially, poor. You can't fight a system when you can't even find the owner. The ultimate lesson is this. The same legal language used to protect medieval land from the crown now makes modern billionaires untouchable. Before we unseal the documents that expose this ancient tax evasion mechanism, tell me, where are you watching this unfiltered truth from? Drop your city in the comments and hit subscribe now. Because understanding this mechanism changes how you view every billionaire alive today. To understand the trust, you must first understand its enemy, the death tax. In medieval Europe, wealth was land, and kings, always hungry for cash to fund their wars, had a brutal form of taxation called feudal duties or mortmain, meaning dead hand. When a feudal lord died, his property automatically reverted to the king. The heir had to pay an enormous, often crippling tax to get the land back. This was the king's primary liquidity tool. It was a tax on death, designed to break up old families and keep the crown powerful. This was the ultimate threat to generational wealth. The challenge for the medieval elite was simple. How do I die without technically owning anything? The answer came from the cunning legal minds of the church and the Knights Templar. They couldn't change the king's law, so they created a new, parallel reality using a piece of legal genius called the use, the ancestor of the modern trust. Here is the simple, powerful trick. Imagine a lord. Let's call him Baron A. Baron A wants to pass his land, Castle Black, to his son, Lord B, without the king taxing it upon his death. Baron A doesn't give the land to Lord B. Instead, Baron A gives the land to a trusted third party, often a priest or a monk. Let's call him the priest, Party C. The legal document states, the priest now legally owns Castle Black. But the priest holds Castle Black for the use of Lord B. When Baron A dies, the king's tax collectors arrive and ask, who owns Castle Black? The answer is, the priest. Since the priest hasn't died, the tax isn't owed. Lord B, the son, is the beneficiary. He lives in the castle, collects the rent, uses the income, but he doesn't legally own the title. The priest, the trustee, owns the title, but he cannot use the wealth for himself. This was the first great act of legal separation of ownership and control. Sound familiar? This ancient trick is the exact blueprint used by every multi-billion-dollar family office today. The ultimate financial power lies not in owning the asset, but in controlling the cash flow without the liability of the title. The kings fought back. They issued statutes trying to kill the use, but the lawyers always found a workaround. This centuries-long legal battle solidified the concept of the trust as a permanent feature of Western law. When wealth shifted from land to cash, stocks, and intellectual property, the trust simply evolved. The transition from medieval land to modern finance was perfected by the elite families of early America, men like Andrew Carnegie and the Rockefellers. These men faced a new enemy, the modern income tax and estate tax. After the income tax was established in 1913, these families realized that even with their vast corporations, they were vulnerable to the government confiscating their wealth when they died. John D. Rockefeller didn't want his oil empire broken up and taxed. His solution was the perpetual trust. He simply deposited his wealth, shares in Standard Oil, land, and bonds, into a trust. The legal language was so complex that the trust was designed to exist for hundreds of years, far exceeding human lifespan. thereby avoiding the estate tax forever. The key legal maneuver is known as the rule against perpetuities, a law designed to prevent trusts from lasting forever. But lawyers found ways to navigate this rule, creating loopholes in states like Delaware and South Dakota. These states realized they could attract billions in tax-free assets by offering perpetual trust options. Sound familiar? Just as the medieval elite transferred land to the church to avoid the king, modern billionaires transfer billions to a Delaware trust to avoid the IRS. The asset changes from land to stock, but the legal trick is identical. Let's delve into the dark heart of the perpetual trust, the mechanism that guarantees dynasty wealth. The trust is essentially a legal fortress built on three pillars: the grantor, who puts the money in, like Rockefeller; the trustee, the professional manager, like a lawyer or bank; and the beneficiary, the descendants. The power of the perpetual trust lies in its ability to accumulate wealth tax-free. Because the trust is the legal owner of the assets, the beneficiary only pays tax on the income they distribute to themselves. If the trust holds and reinvests the wealth, the assets compound tax-free for generations. Here's a shocking fact. In states like South Dakota and Nevada, a perpetual trust can last for up to 1,000 years or even indefinitely. This ensures that assets placed in the trust today are functionally immune from estate, gift, and generation-skipping taxes for potentially 40 successive generations. And consider this: the largest single perpetual trust in existence is widely believed to be tied to the Walmart Chuck Walton family assets, with an estimated value exceeding $200 billion. This massive wealth is legally shielded, ensuring the family controls its vast retail empire without the government ever getting its cut. The illusion here is accountability. The trust system creates a financial black hole for regulators. When a regulator wants to investigate the source of wealth or seize assets, they must know who the ultimate owner is. But because the trustee is the owner and the beneficiary has only a contingent right, the regulator gets lost in a legal labyrinth. The greed of the elite ensures they employ the best lawyers to build these fortresses with layers of anonymity. It's estimated that $20 to $30 trillion of global wealth is currently held in offshore and domestic trusts, entirely outside the visibility of most tax authorities. This hidden wealth destabilizes global markets by making the true distribution of power unknowable. The true modern evolution of this scheme is the Asset Protection Trust. These are designed to shield assets not just from taxes, but from creditors and lawsuits. If you're a doctor sued for malpractice, or a CEO facing a shareholder lawsuit, transferring your assets to an asset protection trust, often in a place like the Cook Islands or Nevis, can make them virtually untouchable. The U.S. Treasury Department estimates that offshore tax evasion and complex trusts cost the U.S. government approximately $70 billion in lost revenue annually, revenue that must be covered by the middle class. This is the ultimate moral hazard. The rich have built a system where the rules of accountability and taxation apply only to the productive middle class, while the dynastic wealthy are legally immune. This is a system of parasitic finance where the trust acts as the shield against financial consequences. The greatest danger isn't that the trust exists. The danger is that it allows the concentration of immense, generational economic power without the corresponding public accountability. When $200 billion of wealth is managed by a small group of trustees, their influence on politics, media, and regulation is absolute, yet their legal ownership is nil. This engineered collapse of the tax code ensures that the gap between the 1% and the 99% doesn't just grow, it becomes permanent. The top 0.1% of U.S. households now hold a greater share of total household wealth than the bottom 90% combined, a level of inequality not seen since the original Gilded Age, when the trust was gaining legal power. The history of the trust is the history of the denial of public responsibility. The medieval lord denied the king his due. The industrial magnate denied the public its due. The modern billionaire denies the nation its due. We are required to deny that the foundational laws of Western finance were written not for justice, but for tax evasion. We are required to deny that the legal system is a tool, wielded by the richest to create a permanent, untouchable aristocracy. Ponder this. Are we wiser now or just walking the same path in better suits? If you believe that this ancient legal blueprint for tax evasion must be understood by everyone, share this video widely, expose this hidden truth to your network, and subscribe immediately so we can continue to unpack the hidden mechanisms that control your life and your wallet.